everyone. I wanted to talk about some mistakes that traders make when they first start out. Now, about 8 years ago, I started trading stocks and I knew none of this. I had read a couple of books, but that was really it. There weren't all these resources, right? YouTube didn't have all these tutorial videos. There weren't support groups on Facebook. There weren't message boards about this. There wasn't a guy like me talking to guys like you, people like you, telling you what to trade, how to trade, what to do. So I wanted to come up with a top 5 list of mistakes all new traders make, and not even new. Some of these mistakes I still make today because you get so wrapped up in stuff, right? Like when I first started, I didn't know anything about charts. I didn't know anything about timing. I didn't know anything about paying attention to analyst reports. I didn't know any of that. And as a result, I made a lot of mistakes that cost me a lot of money in the long run. Because I would get in too late. I wouldn't do the right research. I would get out too soon. I would get out too early. I would make mistake after mistake after mistake. And those mistakes ended up making me a better trader, which now I'm hopefully going to pass those on to you so you don't waste years and years and years making really stupid mistakes. So the first, number 5, mistake that traders make, I'm going to do 5 mistakes new traders make. And please, in the comments below, make this list longer. Let's make a big list of mistakes traders make so we can all have something going in this and we can all help a lot of people not make the same consistent mistakes over and over and over. So number 5 is buying a stock too late or too early. Basically, in a nutshell, what that means is sometimes we get a little late to the game. We are not traders. We are retail investors. That is, we work a 9-to-5 job. We've got a life. Maybe we've got family. Maybe we've got a big social life. And we're not always paying attention to the stock market. As a result, we sometimes buy stocks too late. We hear about it. Oh, this stock went up 30%. And we go, well, I should buy it now. Well, you're a little late to the dance, right? The momentum's already been there. It's already had a huge run up. You're buying it too late. The flip side of that is buying a stock too early, where you could be wrong about something. You could go, well, I think this company is going to have a really great quarter because of this new movie or this new show, and you rush into something way too early, and we haven't really seen how the market gauges that new product or that new show or that new invention or medicine or whatever. We haven't seen if it's gotten FDA approval or not, and so as a result, we sometimes rush in a little too early. So it's 50-50, right? You can either get a little late or you can be a little early. Either one hurts. One of the ways to combat that is to, if you're noticing a stock has had a huge run up, take a breather, sit back for a little bit. And the flip side of that is, if you are thinking about getting into something, but you're thinking maybe you're a little too early, wait a little bit. It's okay that a stock has a big earnings report and you didn't get in on it. You can get in after the fact once you know that the momentum is now there. So that's the first one. Number 4 is selling too late or too early, right? So we just did buying too late or too early. The flip side of that is selling too late or too early. Imagine for a second that you have sold a stock that is about to have something really big in the works, right? A new medicine, a new product, a new merger, a new anything. And you don't read the news first. And you go, well, this stock has gone up 7% or 10%. I'm going to get out. And then you read the news the next day when you see that the stock is moving and you go, shit, I should have looked at the news. I didn't read. I wasn't paying attention. I didn't know about that. And so that is an example of selling too early. You're selling a stock before you can see where it can go, and you're maybe shortchanging yourself a little bit, and that really sucks. That's happened to me so many times where I've said, you know, I'm happy with this profit. I've made 15%, and I don't stop and think, hey, wait a minute, why is it having this run up? Maybe I should look at the charts. Maybe I should look and see when the earnings are. Maybe someone knows something that I don't know that's making the stock move higher. So it's always a good idea to wait and pause for a second before you rush into something. Oh, I've got a profit, I'm going to take it. Pump the brakes and look at everything first and try to figure out why it's had this momentum. Should you sell a stock now, or should you wait? And obviously the flip side of buying too early or selling too early is selling too late. You have watched the stock had a monumental rally. Maybe the stock has gone from $10 to $15, and you waited because you were greedy. You didn't want to sell yet, and it started to pull back now. Now it's gone from 10 to 15 back to 13, and you're sitting there going, I waited too long to sell. that'll get you. Sometimes you have to just be happy with the profit that you have and get out and not be greedy. Not say, hey, it's gone from 10 to 15. Maybe now I want it to go to 17. That's being greedy. You are lucky that the stock went from 10 to 15 and it's pulled back because you waited too long. You should have sold. How do you know when you should sell? Because you look at the charts. You look at the earnings. Have the earnings just come out? Did it just have a big rally? If it did, it's going to be a while now till the next time some significant news comes out. So you want to take that pop. When the stock pops and it shoots from 10 to 15, you want to get out at 15. You want to lock in those profits because it's already had its momentum. Don't be greedy. Don't wait. Number 3, the third biggest mistake traders make is not researching a stock before buying it or before selling it. So this plays into the first 2 themes of buying too late or too early, selling too late or too early. Research your stock before you get in. Look to see when the earnings come out. Are you sure you want to buy that stock into earnings? Earnings are volatile. Are you sure you want to be in that stock before the earnings come out? You might not want to be. Have you checked the earnings overall, right? The first is just to check the earnings date. When are the earnings coming out? The second thing is check the actual earnings from previous quarters, previous years. You want to see continued growth, or you want to see the losses start to level off, right? So if it's up here and it loses, but then it stops losing and it trades flat for a little bit, that's pretty good too, because it shows you that the bleeding has stopped, that management has done something to stop the bleeding, and now the stock is starting to move higher again, or at least promising that it could go somewhere else. And you want to look at what the analysts have to say. If you're using Ameritrade, to the side of your screen, it'll show you the analyst ratings. You can click on them. You can read the reports, which I definitely recommend you should do. And you can also go to a website, which I'll link below, called StockFlare, not like Ric Flair, just Flair, StockFlare.com, and type in the symbol, and it'll show you a snapshot of what the analysts think of the stock, whether it's profitable, whether it pays dividends, what the analysts think, and it'll be right there on the screen. It's very easy and very straightforward to read. Second biggest mistake traders make is not using a stop loss. A stop loss protects your money. It's so important to use stop losses. When I first started trading, I didn't know what they were, and I lost unbelievable amounts of money because I would listen to people who were telling me, buy this, buy that, or I would do my own research and I was doing the wrong research, or I wasn't doing thorough enough research, and I was getting into these stocks that were losers, and as a result they would go down, and I was so prideful. I was like, no, but I picked this stock. I found it, I researched it, I went on their website, I looked at their products, I picked this. I can't be wrong. It's a reflection on me, which is not how the stock market works, guys. You can do all the research in the world. You can pick the best, most promising looking stock on paper, could look amazing. That's not how it works. Just because you picked it doesn't mean it's going to be excellent. You can pick a loser. It's possible. So the goal here isn't to keep your ego. The goal is to keep your money. You want to keep as much money as you can. So if you pick a loser and it starts going down, you want to cut those losses. You want to get out, and you want to preserve as much capital as you can, 5%, 10%, something reasonable. So you're not getting 30% loss, sitting there scratching your head going, what happened? And now, the number one, that was a drum roll, the number one mistake all traders make is listening to other people. Listening to other people is the worst thing you can do, whether it's a friend at your gym, a buddy, your uncle's friend, a family member, a colleague at work, people on the internet, people on Facebook groups, people on Twitter. Listening to other people, whether they're professional brokers or not, is the worst thing you can do. Because a lot of the time, I don't know who these people are. I've joined some of these Facebook groups. Who are these people? As far as I know, they could have made a large purchase in the stock and are now trying to convince other people to buy it, to raise the price so they can get out. I don't know who you are. I don't know why you're recommending this stock. If you go through those message boards on Facebook or online, a lot of the time people will just say, this stock, it's going to go crazy. And who are you? Why should I be listening to you exactly? What's your track record? Are you in the stock? When are you going to get out of the stock? Tell me more. Don't just pump up the stock on social media or at a party or somewhere. And don't listen to them. Because a lot of the time, these people it's secondhand. They're hearing it from someone else who's heard it from someone else, and they're coming to you going, oh, you want a hot stock tip? I'll listen. I listen to everyone. I'm curious. I'll go home and I'll pull it up online and I'll research that stock. I'll look at it. But, who are you? Why am I listening to you? It's a humongous mistake that can cost traders a lot of money, especially if you're new to the game. Like, imagine this scenario where someone comes to you and says, this is the hot stock, man. You have to buy it. And you, who don't know dick about stocks, go, okay, he seems like he knows what he's talking about. He's rich, he's old. Maybe he knows what he's doing. I'm going to listen to this guy. But you don't know if that guy actually owns the stock, and you don't know if he's going to sell it or when he's going to sell it or at what price he thinks it's going to get to. So you go home and you dump $1,000 or $5,000 into some random stock that you've never heard of, all because some guy told you to do it, only for that stock to then tank. And did you have a stop loss? No, you didn't, because you didn't know what it was or you didn't know how to use one. And so what ends up happening? Because you listened to someone, you bought a stock that you've never heard of, you didn't protect yourself, you didn't research the stock, you don't know when to buy, you don't know when to sell. These are the top 5 mistakes traders make. And that kind of move can wipe you out. It's so important, even if you do listen to a stranger. Even if you do listen to a stranger, a stop loss is so important because it protects you. It protects your money. It says, you don't even have to do it. If you're shy, if you're nervous, if you're doubting yourself, if you're, well, maybe it'll come back, maybe it'll set up a stop loss. Then the computer does it for you. The computer does it for you. But the biggest mistake we make is listening to strangers who don't know what they're talking about. And we listen to brokers who half the time don't know what they're talking about. So, like I've said before, don't listen to idiots. Be your own idiot. Do your own research. That way, in the event that you're wrong, it was because you did something wrong that you can learn from. Don't listen to someone who has no clue what they're talking about, or you'll get wiped out. So those are the top 5 mistakes new traders make. I hope you found this video helpful, interesting, or insightful. I hope you have more tips that you can add below. Please like, please comment, please subscribe, and hit that little bell so you get notifications when I do videos. Today is Saturday. I'll be posting this video maybe today or tomorrow. I try to do 1 video a week. And have a good rest of your weekend.